Hey guys, I just want to upload a video on the Federal Reserve FOMC meeting scheduled for tomorrow. Now, technically, it's a 2-day process starting today, March 15th, and continuing tomorrow, March 16th. But, all the results of the meeting today and also the meeting tomorrow will be published tomorrow around 2 p.m., I believe, Eastern Time. Now, if we go here, this article basically sums up what the expectation of the market currently is. So here we have, you know, the uh, the chairman of the Federal Reserve, Jerome Powell, has essentially signaled and leaked, not leaked, but just um, to announce to the market that he intends to raise the federal rates by 25 basis points in the March FOMC meeting. And the the Federal Reserve has publicly stated that they don't like to surprise the market. So that's probably the most likely scenario that we're going to see tomorrow, is that the expectation that the market has priced in is what is essentially announced on the meeting tomorrow. Um, so I guess that would be the way to conceptualize that, is that in the short term, a 25 basis point raise in interest rates is not really, at least in the short term, not anything really, because it's the expectation that has already been priced into the market. Now, of course, the Federal Reserve, they could do anything they want. I mean, they could come out and raise interest rates by 75 basis points or lower them by so many basis points. But so there's a little bit of unpredictability there, and it is kind of crazy when you think that the entire global economy essentially is governed off these singular decisions. But that's the way it is, and essentially, you have to factor in that element of unpredictability. Anything could happen. What's most likely to happen is a 25 basis point rate hike. And in that scenario, then typically, what happens is, when the when there's nothing off the mark on the expectation like that, a lot of times what you want to pay attention to is some of the things that are said during like the press conference following, and there's sort of an open-ended question format, and those are the type of scenarios that you know uh, new information can hit the market essentially. And but we are going into this FOMC meeting on the back of what is supposedly a very strong labor market and record high inflation. So it's really hard to imagine a scenario where the Fed isn't justifying their actions based on that. But again, anything could happen. And I guess what everybody wants to know is, how do you factor that into the market and trading the market? Well, essentially, right now I have the macro chart on Bitcoin. Typically, the way I conceptualize the macro, you have these areas here. So this 28,000 region roughly to 69,000 roughly, and so we can see price comes down to that level, runs up, swing failure pattern. Interestingly enough, this is kind of where the Federal Reserve they signaled their intention to raise interest rates in the November FOMC meeting. Um, and you can see that had a very real effect on the market, right? I mean, the market just really shat the bed right there, with pretty much every rally getting retraced very quickly. Very heavy sell pressure there. And the important thing to keep in mind is that they hadn't even raised interest rates, right? I mean, they just announced their intention to sometime in the future raise interest rates, which is kind of where we are now. And this is what I mean when I say that what's happening tomorrow, the 25 basis points, is priced into the market, essentially. But anyway, yeah, they announced that here. Price comes down here, hits this macro accumulation level, and that's where we see the volatility dry off. So we can go down to the daily chart, and we can see that more vividly here. So again, we know we're at the historical high time frame level. We come here, and then price, it starts doing something different, right? It starts, rather than creating lower highs and lower lows, it starts taking out the highs, right? It takes out this high here, then it comes down and sets in a higher low relative to this low. So we just conceptualize this here. Higher high, higher low. And then it comes up. And this is where so you see this break of structure. I mean, structure really broke here on this break. But you see what I mean? Higher highs, higher lows. And then you get the volatility starts to dry off, right? And that's where you get the higher low, lower high relative to this high here. Higher low, lower high, higher low, lower high. So you see this narrowing range. Just put that on there. And then we'll kind of zoom out to a weekly chart just to put this in context again. Yeah, so you get your volatility there, and then volatility dries up. Get your narrowing range. And let's go down to an hourly chart. Yeah, essentially you can see, and now like price is almost very tightly coiled around this 38, roughly 39,000 level. Again, this is where we broke structure on the high time frames. Price comes up, and you get a little bit of expansion volatility. Price kind of whips around, and now it's consolidating, coiling up around this 39,000 level at a macro level. Everybody's pretty much on the edge of their seat waiting for the Federal Reserve to issue their policy and issue them guidance as far as interest rates go. And that is definitely something that can be a catalyst, especially if something unexpected happens that day. And the point I wanted to demonstrate with this video is just that the market is primed and ready for that type of catalyst to hit and to create an expansion in volatility. So you can see that anticipation in the market reflected in price action itself. I just thought that was interesting. Tomorrow may be the start of a trending move in one way or the other. You also have your quarterly close coming up on April 1st, or last day in March. So that's another factor to consider. If you like this content, just give a like on the video and subscribe to the channel. I'll be uploading a video soon, within the next week or so, talking about quarterly closes and quarterly opens, and how to trade those, how to think about those in the context of the trending environment, and also in a ranging environment, and what it means for the broader picture when you're trading that. So keep an eye out for that upload, and I'll catch you in the next one.